as you're well aware of. I even put on my banker's clothes today, especially for this. Dick Fuld, the CEO, used to call this our armor that we would need to put on every day to do battle, because it's how he viewed the environment. And believe me, it is quite competitive. So there's the great logo of the Lehman Brothers, nice Roman letters on a green background. Green is the color of money, right? That was the New York headquarters. And this humble little firm, starting more than 150 years ago by two Jewish German immigrants, Henry Lehman and Emanuel Lehman. Those are their images up there. Members of the Lehman family who founded the firm ultimately. Over the development of the firm, they became very prominent in society in New York. Some were involved in politics. These are some of the members of that family. From Meyer and Emanuel, their descendants, I'll name Herbert Lehman, for instance, who became a U.S. senator. Or Irving was a lawyer and politician. The last family member in the firm was Robert Lehman, or Bobby, as we called him, Bobby Lehman. He died in 1969. And if you go to the Metropolitan Museum in New York today, you'll see a whole wing devoted to his former collection of art that he donated to the Metropolitan Museum, the Lehman wing. I mean, often I hear the pronunciation Lehman, which is probably closer to the German, right? But in America we say Lehman. It sounds harder, it sounds quicker, and that's the image they wanted to convey. In 1844, 23-year-old Henry Lehman, son of a cattle merchant, emigrated to the U.S. from a little village in Bavaria. He settled, of all places, in Montgomery, Alabama. I have no idea why. This was the deep American South before the Civil War. Began opening a dry goods store, which he called H. Lehman. His brother arrived a couple years later, and the firm became Lehman and Brother, right? A third brother joined them, Meyer, in 1850, and then they became the Lehman Brothers. Now, Christine Lagarde, who's with the IMF now, right, said that if it had been the Lehman sisters, all of this would never have happened, all this financial crisis. And probably there's a lot of truth in that. But in the 1850s southern U.S., cotton was a very important crop. You know, a lot of it driven by slavery, unfortunately. I'm sure the Lehman Brothers owned slaves at that time. And capitalizing on this market value, they began to accept the cotton as payment for merchandise, and eventually began a second business trading in cotton as a commodity. Now, just to leap forward a bit, and I'll come back to some of the history, the Lehman Brothers ended their existence as an independent company for a while. Between 1969 and 1994, they were owned by American Express. But before that, Pete Peterson had served as chairman and CEO when the firm went through various acquisitions, merging with Kuhn Loeb as well, which was another prominent investment bank, to form Lehman Kuhn Loeb Incorporated. Becoming the fourth largest investment bank in the U.S. behind Salomon Brothers, Goldman, and First Boston. Pete Peterson did a great job in turning around the profitability problems of the firm at that time, with 5 straight years of record profits, return on equity among the highest in the business. However, as tends to happen in tribal associations like this, between traders and bankers in particular, hostilities broke out. The traders were driving most of the profits, and this prompted Peterson to promote the head of trading, Lou Glucksman, to be co-CEO. Lou was already serving as president and COO. So he represented the trading side of the business. I don't know if you've seen films like Too Big to Fail, or Inside Job, or Wolf of Wall Street, and all this stuff. But the traders typically are represented, and there's some truth to this, as savages. They're the animals of the business, right? They have very little education. They do things by instinct, by impulse, you know, whatever really comes into their heads. They have very short attention spans. And we, as the well-suited, tailored, educated bankers, inevitably look down upon them, right? We were doing the white shoe business with our prestigious clients, and these savages were trading assets on the floor wherever they could get away with it. So you can see how there's a cultural difference there immediately, which erupted in the case of Lehman Brothers. When Glucksman came into power, he introduced changes which only served to increase tensions. His management style was not kind and gentle. again, go back to the trading mentality, right, where you practically needed a whip and a chair with some of these employees. And combined with a market downturn that resulted in a power struggle, ousting Peterson, leaving Lou Glucksman as sole CEO. And one of my former bosses at Lehman worked for Lou and told me that once Lou told him that if he went to work for another unit in the bank, which was a possibility, he would break his legs. So that tells you something about Lou. And then in the 80s, Peter Cohen was CEO and chairman of Shearson Lehman, where he led the billion-dollar purchase of E.F. Hutton, another prestigious Wall Street firm. Just going on, the divestment from American Express and emergence as an independent firm. CEO Harvey Golub of American Express at the time divested the banking and brokerage operations, including Lehman, selling off the retail brokerage and asset management, and Lehman Brothers in an IPO as Lehman Brothers Holdings Incorporated. Formerly, they had been acquired by American Express because under the then CEO of that company, he was called Jimmy Three Sticks. His name was James Robinson III, and so the third stood for three sticks, if you will, Jimmy Three Sticks. He had this vision of a financial supermarket. You could go to American Express for anything you wanted, traveler's checks, investment banking advice, retail bank, etc., which didn't work out. And they recognized this, so they spun it off. There were constant rumors. That's when I joined, by the way, in '93, actually. Great timing, in retrospect. There were ongoing rumors all the time that Lehman was going to be acquired again. They were selling at less than their book value. Investors seemed to see very little prospects there. But it did perform well under Dick Fuld, who became CEO. And in 2001, they expanded by acquiring Private Client Services, PCS, of Cowen and Company. And then later on, re-entered the asset management business, starting with $2 billion in assets under management, acquiring Crossroads, fixed income of Lincoln Capital, and Neuberger Berman. So this was a very good business for them, very stable, helping to offset the volatility in trading and investment banking, generating $3 billion in net revenue and almost $800 million in pre-tax income in 2007, the last good year that Lehman had before everything came crashing down. And this Neuberger Berman, interesting company, founded by Roy Neuberger and Mr. Berman. And Roy Neuberger, he just died a few years ago, aged 107. But even prior to that, he would still go into the office every day and work a full day. He was 103 years old, this guy, in a wheelchair, but nothing would keep him away from. So clearly these people are driven. You know, Dick Fuld, worth $500 million. Why is he still driven to lead this company?